First, the foundation, understanding premium and discount zones. What are premium and discount zones? Smart money accumulates positions in the discount zone, that is the buy, and distribute in the premium zone, which is our sell. So as we can see here, marked in green right here, our discount zones is where we buy at, and our premium zone is where we sell at. These zones align with key institutional pricing logic. Think of it as wholesale, discount, and versus retail, premium, and trading. The key concepts we use are premium zone, which is the above the 50% equilibrium line where sellers look to short here, capturing retail buyers chasing momentum. So this zone right here marked in red, this is our premium zone. In our discount zone, below the 50% equilibrium line, where buyers step in, taking advantage of undervalued prices. In our equilibrium is where price is considered fair value. It is often becomes a consolidation area or a magnet for price retracement. So this right here is our equilibrium. This is where price cross, right? Either going higher or below, but this is our 50% line. This is what we'll call our equilibrium. So to identify our premium and discount zone is that we have to start on the higher time frames, which is the 4-hour or the daily, whichever one you want to choose, the daily or the 4-hour. Then we'll use our Fibonacci to split the price into zones. So as you can see here, we're gonna place our Fibonacci from the low to the high. This is our range right here, from the low to the high. That's where we're gonna place our Fibonacci. In the low range, cross that 50% is our discount zone. In the high range, cross that 50% is our premium zone. Then we're gonna only focus on zones that overlap with the following. So as you can see, we have order blocks, liquidity pools, or mitigation areas. So as we can see in these discount zones, we have a order block right here. Price push down lower and mitigate this order block to then rally higher to come clear this old liquidity pool right here, this old buy side liquidity. So price push down lower, cross that 50% line, and tap inside of our order block to then rally higher to come and clear this old high. This is our basic foundation on understanding premium and discount zones. Now let's get into the confluence formula, enhancing our accuracy. As you can see here, confluence is king. Using these factors will validate our premium and discount trades. First, we have our fair value gaps, then we have our order blocks, and then we have our liquidity sweeps. So to start with our fair value gaps, price must interact within fair value gap within the premium or discount zone. Example, a gap near the equilibrium often indicates where institutions will step in. So as we can see here, inside of this premium zone right here marked in red, price rallied higher and filled in this fair value gap before pushing down lower to clear these equal lows. The second confluence is our order blocks. Find an institutional footprint, the last bullish or bearish candles before a strong move. These are often retested in discount or premium zones. So as we can see, price push down lower to mitigate a discount zone right here to then pull back inside and cross this 50% to tap inside of this order block inside of this premium zone to then push down lower to break these old lows and form this equal low. Look for areas where retail stop losses are clustered or positioned. Example, a liquidity grab above a premium zone is a primary sell setup. Just like we see here, price was once in a uptrend, then price rallied higher and took liquidity from these old highs, and then rallied lower and give us a breakup structure. This displacement set it up perfectly for a beautiful sell setup. Then we can see that price pulls back inside of this premium zone, mitigate this order block to then push down lower and give us a breakup structure, and then left this fair value gap. Just like we stated, one of the confluences is our fair value gap. Price pulled back, mitigated this fair value gap to push down lower and cleared these equal lows. Just like we stated in these example steps, make sure you guys write all of this down or take a screenshot of this. Now let's go over the exact blueprint to turning these zones into trades. This right here is the exact trade execution steps. So first we'll mark out our zones. We'll use the daily or the 4-hour chart to establish premium and discount zones. So as you can see, this is our 4-hour leg right here. Price push down lower and give us this old low. So from this old low to this old high is our range. We'll start from this old low. This is our discount. This old high, this is our premium zone. And right in that 50% is our equilibrium. Then we'll check for confluences. Like we stated, is there an order block? Is there a fair value gap? Is there liquidity sweeps? Are there multiple overlaps in one zone? As you can see in this discount zone, we have this old low right here. So this is a point of liquidity. And we have this order block right here, which is another type of confluence. So we can see price push down lower inside of this discount zone, cleared this old low right here, this point of liquidity, and tap inside of our order block to start pushing price higher. And now on the 1 hour or the 15-minute chart, guess what we do? We look for market structure shifts or rejections from marked zones. As you can see, this is our 4-hour zone. We see that price pulled back, but not give us a firm body breakup structure of these old lows. This right here is what we're looking for. Then on the lower time frame, we're looking for lower time frame market structure shifts. Once we get those lower time frame market structure shifts, on those pullbacks, we can either place our entries right here. We can see right at that retest, price can take our trade right at that retest, or we can just take the original risk entry right here, and we're targeting opposing side of liquidity, buy side highs right here, these old highs. Now we'll just place our entries after the confirmation. An example is a bearish engulfing in a premium or discount zones. Then we place our stop loss above or below the swing high or the swing low. Then we target the first pool of liquidity or opposing zones. So in this scenario right here, we're just targeting these old highs, this buy side liquidity. Now let's go into charts and see exactly how we use premium and discount zones to catch snapper entries. If you are interested in a free Discord where me and my brother Trades share daily analysis and have a free sport course where we share trading lessons and trading studies in models, and we also have trading resources like ebooks, our Spark journal, and PDFs of every video that we have. And as you can see right here, traders inside of the Spark Trading U community catching trades with the premium and discount model. As you can see right here, catching this much amount of pips with our premium and discount model. If you guys are interested in joining the Spark Trading community, it is free. Click the first link down below in the description and join the Spark Trading community. Now we're on NASDAQ on the 4-hour time frames. As you can see, price rallied higher and give us a liquidity sweep of this old high right here. Then went down lower and give us a breakup structure of this swing low. This is exactly what we're looking for. We're looking for a swing high getting taken and then a breakup structure of a swing low. So now our 4-hour range is from this old high to this old low right here. So just like I stated, right, we can grab our Fibonacci or we can grab our Gann box, right? I'm just going to remove it and bring it back. So from the low to the high right here, this is the settings for the Gann box. These are 0, 1, and 0.5. And you can just put the colors exactly how you want it. So this is our discount and this is our premium zone. So what I want to see is for price to come higher, tap inside of this 4-hour zone right here, and then scale down to the 15-minute time frames to find me a lower time frame zone to push down lower to come and clear these old lows right here. So now let's play price and see exactly what happened. Now we can see that price went higher and tap inside of our 4-hour order block right here. This is our 4-hour zone. This is a fair value gap inside of this 4-hour premium zone. Now let's go down to the 15-minute time frames and see exactly how we can find a position. Now that we're on the 15-minute time frames, as you can see, price had rallied higher and cleared this internal range high and tapped inside of this 4-hour order block that pushed down lower to give us this breakup structure of these swing lows. So this now is our new range. So we can start from this old low right here to this old high right here. So anywhere in this range right here is perfect to sell, and any down here is perfect to buy. So we're looking for inside of this 15-minute order block right here. This is a 15-minute order block. Now let's play price to see if we can catch this trade right here inside of this 15-minute order block to target these old sell side liquidity lows for a 124R. Now let's play price. As you can see, price is playing inside of our range. Now, as you can see, after price builded all this internal range liquidity lows, we can just bring a low right here. This is all internal range liquidity lows, and now price is tapped inside of our 15-minute order block. Now let's see if we can target these old lows, either this low right here or this old low. And boom, as you can see, after price pushed down lower and give us a breakup structure of these old lows, we got a wick pullback right here, this old wick right here. This wick pulled back, mitigated its old zone to then push down lower violently to come and clear this sell side low in this sell side low. So this is exactly how we use our premium and discount zone to find sniper entries and to catch extremely profitable trades. I've also created a free course in a free Discord where me and my brother Arkham Trades share daily analysis. If you guys want free access to that, make sure you guys check the first link down below to get free access to the Spark trading community. Make sure you guys like, comment, subscribe, and let me know down below what you think. This is it, Spektrades.